you, I made a short video just for you, just to teach you how to invest in the stock market. And by the end of this video, I promise you, you will know how to best use your money for investing. So the first step would be for you to get a brokerage account. Now, there are a bunch of them out there and they all cater to different audiences. There are some people who are into day trading, which are pretty much short-term investors. And then there are long-term traders, which are pretty much people who invest like Warren Buffett, who really invest in the company for long-term. Now, the names that are out there, the well-known names are Charles Schwab, E-Trade, Vanguard, Fidelity, but the really popular ones are like Robinhood and WeBull, which I'll provide the links down below. And if you click on them and if you set up an account with them, you could get free stocks. And setting up a brokerage account, it's very simple nowadays. You don't even have to walk into their office. You can just do it at the comfort of your own home by going on the website or giving them a phone call. So the thing with brokerages is that they're pretty much the middleman. They serve as helping you buy companies through their platform. The way you would do this is that you connect your bank account to your brokerage account. So pretty much like, let's say I got Chase Bank and I decided to get E-Trade. So basically I would connect my bank account to my E-Trade account. Then I would wire money from my bank to my E-Trade account and then start day trading, or I could start investing in any company that I want. So now that you've got a brokerage account and you could start investing in a company or day trading, you should learn something. Know the difference between a day trader and an investor. A day trader is pretty much a person who invests in companies for the short term. They could either buy a company for a day or two, for a couple of days or a month, and then they could just sell it. But a long-term trader, which is an investor, that person can invest in a company for a while, for years, decades, or even for life. Now, what I suggest that you would do when you first start investing in the stock market is do not jump into day trading. And I'll tell you why. Because day trading, it's pretty much gambling. It's spectating. It's all it is. You're betting against the economy. And it's like going to a casino and gambling. You're pretty much going against the house and you're betting against statistics. Statistically speaking, the odds are against you. So it's something that you would want to avoid at first. What I would suggest is get your feet wet and start investing first, which I'll explain in further detail in step number 3. Step 3, invest in S&P 500 index fund or ETF, and one that pays you dividends. These funds, they practically follow the American economy and they follow the S&P 500. Out of every index, comparing the S&P 500 to the NASDAQ and the Dow Jones, the S&P 500 has given the biggest returns to individual investors. And statistically speaking, over its long-term history, investors who've put their money on an S&P 500 fund or ETF have outperformed the hedge funds on Wall Street, and they have gotten even better returns than investors who invested in individual stocks. Now, this next step is very crucial, so heed my advice. Once you've gotten your feet wet and you've invested in an S&P 500 ETF or index fund, you're going to feel the urge to invest in individual companies like Coca-Cola, Pepsi, etc., etc. And yes, I have heard Warren Buffett say a couple of times, invest in Coca-Cola company. But there's something that you should know. It doesn't matter who it is. It could even be a random guy on YouTube. It could even be me. Heck, if I ever give you a stock advice in the future, do not heed it. Never, ever invest in a company just because somebody told you or just because some random guy on YouTube told you to. Okay, that's the last thing you want to do. Just do your own due diligence and really look into a company before you invest in it. The last thing you want is investing in an individual company and lose your money and then going back to me or somebody else and telling them, hey, it's your fault. That's something you really want to avoid, because at the end of the day, regardless of whose fault it is, you're the one who's in trouble and not the random person on YouTube who gave you the advice. Also, you're going to feel the urge to start day trading. Before you start day trading, try to pick up a couple of books on day trading. Don't just jump into it. Don't buy programs from certain gurus online. Don't make that mistake. Do your own research about these people who teach day trading before you jump in and start buying the program. What I would suggest is you first buy books on day trading. They can teach you a whole lot, and it's going to be much cheaper than what the gurus are selling. Or if you're near a library, you can borrow books on day trading. It's free information. You can start picking up techniques on day trading, how to use technical analysis. So I'm going to end this video with a disclaimer. Everything that I say in this video, do not take it as financial advice. Please consult a financial advisor before you commit to individual investing. And don't forget, if you haven't subscribed to my channel, subscribe now, hit the bell down below, and click on the like button for the YouTube algorithm. And if you're interested in setting up an account for WeBull or Robinhood on your iPhone, click my links down below and use my links to get 2 free stocks for WeBull and 1 free stock for Robinhood. Okay, my fellow young investor, get out there and happy hunting.